Today's financial market update. The most important market insights and investment ideas you need to know. Market sentiment is bullish, mild. Market is performing well across major indices. Index performance, S&P 500 at plus 0.28%, Dow Jones at minus 0.33%, NASDAQ at plus 0.96%, Russell 2000 at plus 0.47%. AIOS experienced a remarkable surge of plus 138.87% following strong earnings reports and promising growth in AI technology. The substantial rise in AIOS indicates a robust investor appetite for technology stocks, particularly those focused on artificial intelligence solutions. Consider adding positions in AI-focused companies like AIOS, which are benefiting from strong earnings and growth narratives in technology. The U.S.-Iran conflict has escalated, with oil prices reaching $90 per barrel, impacting global supply chains. Rising oil prices contribute to inflationary pressures, signaling potential cost increases across various sectors, which may affect consumer spending. Consider allocating funds to inflation-protected securities, such as TIPS, to safeguard against rising inflation rates and maintain purchasing power. Verisk Analytics revealed a $1.5 billion share buyback alongside a $2 per share dividend for Q1 2026. The share buyback and dividend from Verisk indicate strong financial health, enhancing shareholder value, and reflecting confidence in future performance. Consider increasing positions in Verisk and Linde, as their strong performance and shareholder returns suggest growth potential in their respective sectors. The S&P 500 achieved a new record high driven by a significant rise in Apple stock prices and lower oil costs. The record high in the S&P 500 signals strong investor confidence, suggesting that markets may continue to rise with sustained consumer spending. Consider allocating investments into retail stocks that are likely to benefit from increased consumer spending and strong earnings potential. The effective federal funds rate has decreased from 4.33% in May 2025 to 3.64% in April 2026. A lower effective federal funds rate often leads to reduced borrowing costs, stimulating consumer spending and investment. Consider allocating funds to growth-oriented sectors, such as technology and consumer discretionary, which may benefit from lower borrowing costs. The U.S.-Iran conflict is escalating, with potential implications for global trade and economic stability. Investors should be alert to how geopolitical tensions can cause ripple effects across global markets, particularly in energy and trade sectors. Consider diversifying into energy stocks, as fluctuating oil prices may create buying opportunities amid geopolitical uncertainty. Oil prices have surged above $110, reflecting escalating tensions in the crucial Strait of Hormuz. The spike in oil prices indicates a heightened risk for consumer costs, potentially leading to increased inflationary pressures across the economy. Consider diversifying energy investments, particularly in oil and gas sectors, to capitalize on potential price increases amid geopolitical tensions. The U.S.-Iran conflict has escalated, contributing to a 15% rise in oil prices over the past month, Investors should recognize that heightened geopolitical risks can lead to increased currency volatility, impacting exchange rates significantly. Consider diversifying your portfolio with commodities like gold, which tend to perform well during geopolitical uncertainty and rising oil prices. RTX Corporation has secured U.S.-approved arms sales worth $8.6 billion to Qatar and Kuwait, including key missile contracts. Investors should note that these arms sales indicate a strengthening of U.S. military partnerships in the Middle East, potentially altering regional power dynamics. Consider increasing allocations in defense stocks, particularly in companies like RTX that are poised to benefit from government defense spending. Oil prices have surged above $110 per barrel amid rising geopolitical tensions, particularly involving the U.S. and Iran. The rise in oil prices indicates increased uncertainty in global energy markets, which could lead to sustained inflationary pressures for consumers. Consider allocating a portion of your portfolio to energy stocks or ETFs that are poised to benefit from rising oil prices. Recent tensions from the U.S.-Iran conflict have intensified, affecting global credit markets and raising borrowing costs. The tightening of credit markets suggests that investors should prepare for increased volatility and potential downturns in various sectors, particularly in finance. Consider reallocating assets to sectors less sensitive to credit availability, such as utilities or consumer staples, to mitigate risk. U.S. Treasuries are experiencing a rebound, with yields decreasing following a drop in oil prices from four-year highs. The easing of oil prices may stabilize market sentiment, allowing U.S. Treasuries to regain some attractiveness among risk-averse investors. Consider allocating a portion of your portfolio into U.S. Treasuries to hedge against rising geopolitical tensions and to benefit from potential yield stability. The Albuquerque metro area issued $10.66 million in building permits for new storage and residential developments, indicating growth. The surge in building permits suggests a positive outlook for the Albuquerque economy, potentially enhancing local housing demand and employment. Consider investing in companies involved in construction and development within the Albuquerque metro area to capitalize on the growth potential. Tensions between the U.S. and Iran have escalated, affecting global credit markets and lending practices significantly. Geopolitical tensions signify a heightened risk environment, leading investors to reassess their risk tolerance and investment strategies in private equity. Consider reallocating capital towards restructuring firms that could benefit from greater demand for operational efficiencies and turnaround strategies. The Uranium and Nuclear ETF, URAN, surged 75% over the past year due to increased AI-driven energy demand. The significant rise in URAN suggests a robust market interest in uranium as a clean energy source, driven by AI's energy consumption. Consider allocating a portion of your portfolio to the Uranium and Nuclear ETF to capitalize on the growing demand for energy solutions. Bitcoin's ETF inflows exceeded $600 million in May 2026, demonstrating a significant resurgence in institutional demand. The substantial Bitcoin ETF inflows reflect growing institutional confidence, indicating that major investors are bullish on Bitcoin's future price potential. Consider allocating a portion of your portfolio to Bitcoin ETFs to capitalize on institutional interest and potential price appreciation. Renewables have now surpassed natural gas in the U.S. energy mix, highlighting a transformative shift in the landscape. Hyundai's advancements in green tech signal a strong commitment to sustainability, potentially bolstering investor confidence in the clean tech sector. Consider investing in companies that support Hyundai's vision, such as those involved in battery technology and renewable energy infrastructure. Thank you for watching. FERPA, your financial Sherpa.